Hello and welcome to yet another PV Magazine Roundtable. This is our fourth and final session of the PV Magazine Roundtables Europe events that we've been holding across the past 2 days. Well, we've had quality, we've had asset management, we've had sustainability, and this fourth and final session is addressing markets. Now, Michael, you've been behind the program of this market session. What do you mean by markets?
I mean, it's mainly about opportunities today, and it's about opportunities in new market segments, because in the last years we have heard a lot about PPAs, and we are starting to talk a lot about hydrogen, and we will talk today and discuss what opportunities solar companies, solar investors, solar project developers, all other sort of solar companies will have in these two new market segments which are coming.
Really on the cutting edge of market developments. Now, we have some great partners, as always, that help us put on these events. Michael, who are the partners for today?
I want to thank very much Smartenergy. Smartenergy is platinum sponsor of this session. And I want to thank also our gold sponsor. This is Vattenfall.
Okay, well, we're having this event online, of course, digitally. We're socially distanced as well. The whole market has been impacted by the coronavirus crisis, the COVID-19. It really is a global development, but very much also here in Europe. How is that impacting our discussion?
Of course, a lot, because when we started to plan this session, we didn't know about Corona, and then it just hit us in the middle of the planning, and then we thought, oh, does it still make sense to have a PPA session? And then we talked to Bassam Darwish, and he is energy trader, and he said, well, he's quite optimistic, because he said the main drivers are intact, and that's why I also now want to welcome Bassam Darwish. He is from Vattenfall, and he will talk to us about the drivers of
everyone. My name is Bassam Darwish, and I'm responsible by Vattenfall Energy Trading for renewables origination. And today we would like to speak about the drivers for the PPA market pre and post Corona. The first slide is COVID-19. What happened? The result of the lockdown was a high reduction of the power demand. That's the left side you could see. The different countries in comparison. And on the right side, you could see the result of monitoring and the experience is that we have a correlation between power demand and gross value added. So high reduction of the power demand, correlation between power demand and gross value added is the result. The second slide is here. I would like to show you the merit order. This is the economic model function of supply and demand. This is a way of ranking the marginal costs related to operational sequence of the power plants. But this model, economic model, doesn't work correct for the renewables, because the margin costs are zero by the renewables. To lift the real value are some measures necessary, like storage. You could see the measures on the right side. We need pump storage, power to gas, battery storage, power to heat, electromobility. And the result of that is that we bring flexibility in the renewables. And that would be the real value of the renewables. One moment. So now we came to the drivers. The first driver is the power generation cost. Here we are concentrate on the open space solar. On the right side, you could see the year 2020. We have solar prices 39 euro per megawatt hour, and for the little ones to 65. And this is an old an old picture of the Institute of Fraunhofer, and in my opinion, we could see in the next years between 39 euros and 20 euros per megawatt hour. This is so important to reduce the solar panel price. We need more power load outcome from the solar panels, and this is important, adequate profits not from subsidize. The reduction of the power production costs are important for more market establishment for the renewables. The second driver is the tender result of solar. This is only less than for 10 megawatt hours. Solar parks, this could be a good indicator for solar parks. Here you could see the last auction in this picture was in October 19, and the price was 49 euros per megawatt hour. The next slide shows you the driver, the decreasing supported rates and changing regulatory conditions. The technology now is good developed, and so we could now integrate the renewables in the free market. This slide, we could see the black one is the load curve. This is the demand side. The yellow one is the production of solar. And this green one is the production of wind. And the red one here is the day ahead, the spot market price. And the blue one is the intraday market price. This shows you the April production and price curve. And here we could see on a good way the cannibalization effect from wind and solar production, and also the negative price. This is a correlation effect. When we see here, we have cannibalization effect between wind and solar. We have more production than the demand side, so we could see here negative prices. When we have more power than the load, we have negative prices. This is the consequence. So we need more and more storage to make the renewables flexibility. This is the real value of the renewables. So we have had a strong demand decrease and price decrease. That's the result of the lockdown. Sorry, I have a problem with my slides. One moment, please. So the next one is we are here, the drivers, the wholesale market price, the demand and the production and prices. Here we could see the correlation between the emissions and the price. Here, the blue one is the price, the day ahead price, and the pink one is the emission. Here is the price curve, and here is the emission one. Could you hear? Okay. Good. You could see my presentation now? Okay, please. That's right. Yes. This is the year that you could see is from January 19 to June 20. And we have a strong dependencies on renewables, on production, on emissions, on demand, and these set the prices. The next one, please. Yes. One moment, please. So, okay. The next one, here we could see the red one is the day ahead, the spot market, and the blue one is the intraday market, and the green ones are the emissions. And here we could see the correlation between the three things, and we could see that we have a problem with start the lockdown here. The prices go, we have a decrease on the prices, on the demand, and also that's good for the emission, but not for the demand and the prices. So we could go to the another slide, please. Okay, price effects on solar. What we could see here. The main message is to realize value in the main production side. You could see here as red one, the red line are a production and price line for solar production in 2021 in April. And the same is, the blue one is 2017 and the yellow one is 2018 and the green one is 2019. And here we could see in the main production time, we have a price problem. And the result of this, we must invest in storage. Here we need a good regulatory and general conditions and also research funding. The value come when the renewable power production is flexible. And so we need storage. On the flanks, you could see by the red line, we have good price situation, but not in the meantime. The next one, please. Okay. We need to hedge new solar parks. We need a very, very good long-term market price outlook, because the horizon that we have in the wholesale market in continental Europe is only 5 years, and the liquidity that we have is 3 years. For a hedge for more than 5 years, we must have a good and analytical market long-term outlook. Vattenfall, for example, is one of the biggest market maker with a lot of experience in this. And here you could see on the left side a market outlook. This is from Energy Brain Pool from 2020 to 2050. And on the right side, you could see expected changes and efforts on future market price. We could see in continental what increase the prices is the phase out coal in nuclear power. What would have been a slight effect is uncertain commodity price level, gas, hard coal, and oil. And an increase is electrification of transport, heat, and this would be increase the demand. Another price increase point is CO2 tax and effect to decrease the prices is the RES expansion to achieve targets. The next one, please. Ich weiß. Okay. Okay, here we could see the drive is electrification, transport, heating, and digitalization, and sector coupling. What say the institutes for the development of electricity consumption in the future. The next one, please. This is the last slide that we have now. The next one. Okay. The next one is the driver is the demand for real power, green power from corporates and utilities. We go to the next slide, please. Okay, what is after Corona? In my point of view, is before the climate catastrophe, because the consequence for the climate catastrophe is much more extreme than Corona. But the effects of Corona, in my point of view, are the digitalization, fast growing, sustainable demand increase, decrease of the economic level, and we have a change in mind, think globally, but act locally. We would have higher taxes and the hope of sustainable growth. That's a must. And we hope, and we must do a little bit, big things for this to solve the problems of the climate change. So the result or the key message is economic growth is not everything. The growth of sustainability is a chance to solve the environment problems, and the renewables could be one of the important part of this. Thank you very much for your attention.
Thank you very much, Bassam, for your interesting perspectives from the German market. And I take with us that the PPA market will have a future, and that we will need PPAs also as one of the market segments to fight against climate change in future. Thank you very much. One of your colleagues will be on the panel later from your team, and he will also be there to answer questions. Okay, connected with us from the United Kingdom, I welcome Mateusz Wronski. He is Head of Product Development at Aurora Energy Research. And we will not learn only something about the effects of COVID-19, but I think from his presentations, we will also learn a bit what the differences of the different PPA markets are in Europe. Go ahead, Mateusz. I'm happy that you are here.
Hi, delighted to be here and welcome everyone. I will jump straight into it, given that we don't have that much time. And I suspect I'll maybe just start from a general comment that my presentation is largely in agreement with the picture painted by before me, and focuses mostly about on the short-term disruption rather than the changes in the long-term trend. I think the fundamental observation that the key drivers remain largely intact is very much in line with the research that Aurora has produced. But how much of an impact can we expect in the short term is what I will try to cover today. Okay, so starting from where we are, again, this has been partly touched on by the previous speaker, so I won't spend too much time here, but just the scale of demand disruption that COVID has caused is I think well illustrated by looking at these lines and the percentages on the right hand side. We've seen 20, 25, even 30% in the most extreme weeks, which are not shown here, of a year-to-year change in some countries in terms of demand. You can see on the left hand side the introduction of lockdown typically has increased the trajectory or made the trajectory steeper in terms of that decline. And we've seen a prolonged period of demand being depressed. So of course that's the most immediate consequence of COVID, a pretty obvious one. Now, how it translated into prices is shown on the next slide. You can see a very pronounced downward trend as we enter the lockdown. Now, if we compare this to previous year's prices, we observe between 40 and 60% year-to-year change in some of these countries in April, May. So if you compare April, May 2019 to April, May 2020, you see between 40 and 60%. 60%, the most affected country being Spain. Now, the reason for that huge decrease in prices isn't just the disruption in demand and the direct consequence that has on prices. It is also the less direct consequences. So the fact that commodity markets have been severely affected as well, and that the slowdown in economic activity in general has led us to a situation where the carbon price is also rather weak. So a combination of these three factors, so weak demand, low commodity prices, low carbon prices, have provided kind of COVID-driven main background for the low price environment. And to top it up, we've had a very sunny period over the last few weeks across Europe, with records being broken in some countries in terms of solar output, and that obviously didn't help. So in some places you can see prices were as low as 10, 15 euros per megawatt hour. Now, of course, this is a problematic environment for corporate PPAs. Price has to stack up, and if the price that the buyer is facing today in the market is so much lower than what a solar developer would be willing to offer under corporate PPA, then they will think twice or three times before they enter a long-term contract at a higher than the market price. Now, obviously, everyone understands that the situation is very atypical now. So it isn't about the price going to stay at 10 euros. Everyone knows that's not going to be the case. But the uncertainty that really is the roadblock in corporate PPA deal making at the moment is with regards to how fast the recovery will be. And Aurora has done an analysis on this, quite an in-depth study that we published a couple of weeks ago for these 7 countries that you can see here, in which we analyzed 4 different scenarios for recovery. You can see the kind of 2 main axes is the severity of the economic impact in the rest of the world and in Europe, and you can see the 4 different cases that we analyzed, from the most mild in the top left corner to the most severe in the bottom right corner. And in terms of the factors that we've actually varied in these scenarios, we looked at the duration of the lockdowns, we looked at demand, supply, commodity prices, of course, which are affected, as I said, as well as the investment environment and how that is affected. And what transpires from this analysis is that there's a huge uncertainty as to how prices will recover over the short to medium term. And you can see the results here on slide 5. We're looking at the example of Spain. If you look at, for example, 2021, you will see that for both baseload price, which is here on the left-hand side, and the solar capture price, which is on the right-hand side, we see between 50 and 60% difference relative to the pre-COVID levels, which is this gray line, and the most pessimistic scenario, or roughly a 45 to 50% difference between the kind of most optimistic and the least optimistic scenario. So there's a huge uncertainty, and that's effectively what at the moment makes everyone think twice whether they will enter a corporate PPA or not. And unsurprisingly, until we know better which of these trajectories we're on, I expect corporate PPA deal making to be largely halted, and that's what we've seen so far. Now, Aurora's central scenario is that we will be on the green line, or very close to the green line. But the uncertainty is there. That's what's stopping us from making deals. Now, to make this point even more pronounced, what we've done is didn't just look at the price itself and capture price itself. We looked at the value or fair value of a corporate PPA contract, a concrete contract, in this case, 10 years, starting in 2020, fixed price, has produced volume clause and no economic curtailment. So let's make it very specific, right? And what you can see is that in this scenario 1, the most benign one, we end up with a fair value of the contract of 36 euro per megawatt hour. You can make deals at this level. Our pre-COVID scenarios had 38, 39 euros per megawatt hour. This isn't an enormous drop, and one that would still allow, we think, in Spain for corporate PPA deal making. So if there was a high certainty around that level of recovery, we would see volumes coming back very soon. However, if you look at scenario 4, the picture is different. We see €10 lower fair value price for the same contract if someone believes that the recovery will take much longer, that recession is going to take a bigger toll. As a matter of fact, today we had an OECD report that has shaken the markets a little bit, maybe providing some evidence towards less optimistic recovery scenarios. But I think most importantly pointing to the uncertainty around that, the uncertainty around which of these trajectories we may be at. And that's effectively what corporate PPA deal makers have to deal with. Okay, so to summarize, what we have seen is pretty much a stop to the corporate PPA market, with a few deals that had been already largely progressed, finalizing during this period. I think EDPR in Portugal is probably the most notable deal. It was around 60 megawatts, I think, for a solar farm. Other than that, we haven't seen much activity, unsurprisingly. And the key roadblock is the uncertainty around the prices. We see robust recovery in our central scenario, but unsurprisingly, players on both sides are being cautious. Now, we haven't really talked about this much, but in terms of where this uncertainty is largest, and this is the third point here in my summary, the countries that we expect to be and that already have been most affected are the ones where the gas generation is most impactful in terms of price setting. The reason being gas prices have been very affected and carbon prices have been also affected. So if you have gas technology at the margin, you would have seen quite a big impact. The other point being, which the speaker before me has very much highlighted, if you have high renewables penetration, obviously that merit order effect means that even a smaller drop in demand could have a much more profound consequences. The supply curve obviously is such that if you are very close to that zero marginal cost setting technology, then even a small drop in demand will mean have very profound consequences for your price. So the more renewables you already have and the more exposed to gas you are, the more impact you might see from COVID. Not surprisingly, Spain is very much affected and has been very much affected because it's quite high on both of these metrics. Now, I focus very heavily on prices, and Aurora, it is our specialty to focus about prices and price uncertainty and in-depth price analytics, but there are other factors at play, and they should not be overlooked. The three main ones, in my mind, is firstly what happens to industrial consumption. Obviously, the less power you consume, the less you need a PPA in the simplest terms. Even more importantly, what happens to credit ratings. So some of corporates who might have been pondering entering PPA could be less well positioned to do so if their credit ratings have been negatively impacted as a result of the COVID crisis. And finally, what will be the shape policy-wise of the green recovery, the Green New Deal? Of course, the plans for such deal, whether before coronavirus, but I think COVID has certainly added a dimension to it, and that recovery plan that is being cooked by politicians and civil servants across Europe and across the world, how strongly it will favor direct public sector intervention versus maybe making the markets more palpable, more attractive to corporates and signing corporate PPAs. That will also be an important factor driving corporate PPA demand in Europe.
Thank you very much, Matthias, for this very interesting insights. We have time for one short questions, and as I think there are no audience questions so far, we can just ask you to engage yourself, and send us more questions. I have one question to you, Matthias. I hear very often the argument that a PPA solar plant would run for 30 years, basically. You need 30 years to get the financing. So what does it matter if in the first 1 or 2 years you might see a drop in the price? So that as I understand, it's more the insecurity at the moment, and that when that goes away, then we will see the recovery of the market.
Well, that's exactly my point, which is I think if you look at, I'm not sure if we can still show the presentation, but if you look at all these curves that I've shown on the previous slides, they all converge at some point to roughly the same levels. Is that the question how quickly they converge and what this implies for corporate PPAs that you enter today? Yeah. So it is very much about the uncertainty. I think over the long run, there is no doubt that there's little doubt that prices will be supported at levels that are conducive to PPA deal making. It's just about when that happens, right? It's just about the speed of that recovery. That is the critical uncertainty at the moment that is making people think twice.
And we are running a bit short of time, but we do have an audience question we want to get to. And if a company considers a PPA, does gas price really have an influence? Are they looking for cheap energy or for more sustainability?
It's a great question. I think they're looking for, it depends who you're looking at. There are called price hedgers who mostly look for cheap energy. They, for them, the greenness of it is a secondary consideration, and we certainly have corporates like this in Europe. That's not necessarily the new type of corporates who are looking very much for greenness and sometimes are willing to pay a premium for the greenness. But very often what matters is both. So it has to be both relatively cheap and it has to be green. So gas price, unfortunately, does matter for the volume. There are some, like I said, front runners for whom it doesn't matter, and that's great. There are the giants pay a premium, but there are a lot of corporates who are not willing to pay a premium yet. So depends who you're talking to, but for the volume, for the overall volume of corporate deal making, price matters critically.
Okay, thank you very, very much, Matthias. We have to move on to our next guest. And because when we think of the PPA market, I think it is leading to the next learning boost for our industry. And right at the beginning, it depends on the country, 5 or 10 or 20 years ago, the main challenge for us was to deliver good quality at low costs, and then later we had to learn how to sell, or our industry had to learn how to sell with the argument of self-consumption, and now the industry will have to learn how to do corporate PPAs at the end. And that is basically what we want to discuss today. We want to give some service also, what one can do to enter into this market. And for this we have a short input note at the moment. So, and that is from Björn Pieske. I welcome Björn Pieske. He is business lead, large-scale solar development at Vattenfall Europe Innovation. Also, he comes from the project side, and he will give us some notes on this.
So, hören Sie mich?
Yes, we can hear you very, very well. We can start.
Ich höre mich nicht.
Okay, it seems that we have a slight internet problem.
Okay, dann fange ich jetzt an. Gut.
Okay, this is great.
So, yes, good afternoon, everyone. So I'm happy to have the chance to leave my schooling duties here for now. And I'm very pleased to give you an impulse on the topic service for solar companies offer the PPA sphere. It's very nice to see the ongoing interest in this topic because I see here's a lot of opportunities. We all notice over the past few years a growing interest in all conferences and webinars about this topic. And it's great because it should always be the goal of the photovoltaic to reach a maturity, to participate freely in the market without need of any subsidies. And I think at least for the large-scale segment in Germany, it seems that we are right at the point that we now can start here with the free market. Germany is something of a late starter, but there's a lot of development ongoing right now. Vattenfall itself, that's too far. So Vattenfall itself, it's something of a late starter for large-scale development in Germany. So we start our activities here in 2018 And now, in the meantime, we are ready to start our construction of our first 3 projects in Germany. But we have also a very ambitious growth strategy for Germany, and we have also a number of merchant projects in our development without EEG. So we're really experienced here in this field. If we now look into our development of PPA projects at first glance, they don't differ so much to EEG projects. You need the right piece of land. You need it should be free from restrictions. You need the grid connection nearby and with the necessary capacity. And you also need support of the local community, of course. But what is new, of course, you need an off-taker. At second glance, there are differences. But this is also should be seen as an opportunity for the industry. First of all, we're not bound to the requirements of the EEG, like the 10 megawatt limit or the motorway strips or conversion areas and so on. So we can develop larger power plants, larger systems, but with the larger systems, you have also higher visibility. And larger plants also tend to be more spatially significant, and we need to dive deeper into the regional planning issues. And above all, the competition for land with agriculture is becoming more and more evident. But again, this is an opportunity for clever operational concepts. For example, the dual use of land by PV parks and agricultural. That can be agro-photovoltaics, but it does not have to be. But one thing is here crystal clear. I think the management the operational management of such parks will go far beyond inverter replacement and lawn mowing in future. So we need here clever and smart concepts and ideas, and we're waiting for it. Another aspect is the grid connection. We can quickly reach higher voltage levels than we are used to, and on the other hand, a good grid connection is not longer characterized by just its fact it's close. So we only get paid if we can deliver, of course, and it depends on the form of the PPA contract, of course, but the issue of grid congestions and possible containments in the future must be taken into account. This is especially interesting if the project site and the off-taker are not located in the same transmission grid area. I think for this topic, we depend on expert advice, and I have the expression that this technical competence still has to be built up in Germany's solar community. Another major difference to the EEG world is the lower revenue expectation and a greater uncertainty for the future, which leads also to higher financing costs. I think anything is unusual to set the project duration of at least 30 years or even more. That is, of course, a much higher demands on quality and durability than before. The quality of the components and a good track record of the suppliers becoming more and more important for us. And that could be also a chance for solar companies. Yes, and last but not least, there's one completely new aspect, and that is the conclusion of a PPA. But before we can do this, we have to find a potential buyer and also have to drafting the contract. And in this phase, everything comes actually on the table. So the plant concept, the quality of the components, warranties, insurance, management concept, financial capabilities of the operator to ensure the operation for 10 or 15 years, and of course, risk assessments on all sides. And all sides means in this case, we have a new partner at the table. So we have the project developer, we have the investor or the bank of the investor, but we also have the off-taker who has some demands to the project. And this is a highly sensitive topic, which also defines the success of the project. We are still a long way from a halfway standardized approach here. And so it's unlikely that we can pass this fast without technical, legal, or commercial advice. So that is also something we have to build up some competencies here in Germany. We should also not underestimate the terms of costs and the time for this phase. And it depends it's not depending on the site of the size of the site. So for a single project, for this reasons, we see for a single project should be at least 30 megawatt. Otherwise, you have to pool a lot of smaller projects, which makes also more complicated. Also in this phase, this includes the topic of the expected electricity prices, so the price curves. And also here, I still see a little market intelligence in Germany. We all know this price curves, or we trust the price curves that makes the most profitable project for us. But we should thinking about further. In principle, you must define a project-specific price curve for each location with defined capacity and grid connection point. Just wants to mention here congestions. And then if you have off-taker to another grid part, you have also consider this in your price curve. So here it's also, we depends highly on experts. And I think we should also build up here some competencies in Germany. So in a nutshell, I see here a lot of opportunities for the industry, primarily in the new operational management concepts, and also the increasing interest of high quality components, and very essential, very crucial is here the build-up of developer market intelligence in the areas of network and pricing and PPA origination. So that was my impulse for the panel.
Thank you very, very much, Björn, for this very interesting impulse. I think you really set the scene for the panel, which we will be having now, and thank you very much. So now we come to our panel, which we have to discuss the opportunities which solar companies have, and also to discuss what input Björn has given to us. I welcome Hanno Mead. He's Senior Renewable Originator at Vattenfall Energy Trading. He's working in the team of Bassam David, who we had heard earlier today. I welcome Ralf Bernhard. He is Manager C&I Origination, PPA at BayWa RE. And Eckhard Dose, he comes from the Financing Institute from Bayerische Landesbank, and he does project finance there across whole Europe.
I can't hear Michael.
So there seems to be a irritation that I cannot hear us. Problem solved? Hanno, can you hear me?
I'm sorry, I can't hear Michael.
So, can the others hear me? Then maybe we start.
I can hear you okay, yes.
Okay. I mean, I really wanted to direct the first question to Hanno, but maybe I would also start with Eckhard, because I mean, the point is we have here on this panel, we have the whole, I mean, as project developer, you have to contact banks and you have to contact energy traders. And Eckhard, what are the conditions you need in order to give a credit to a project developer? What do you need from an energy trader like Hanno?
I can't hear Michael. Is that right?
Oh, okay. Shall I start?
Yes, please.
Well, first, thanks for the opportunity to be on this panel and to represent BayWa and project finance and give a little bit of inside view on what makes a bankability project on the financing. To answer this shortly, in the past we had the feed-in tariff and feed-in premiums that were guaranteed by states or countries, and now we look forward to a future with power purchase agreements from utilities and or corporates. So the offtake side has changed, and what we are assessing now much more is the quality of the offtaker, and especially the creditworthiness. So, and this then, of course, has a big impact on what the rating is. We need an investment grade rating offtaker to start with the project finance. So the rest of the financing and the due diligence process is pretty much the same, but the assessment of the PPA and the offtake and everything that's surrounding this risk package. So the balancing of risk between those two parties, the buyer and the seller, this becomes very important, and banks need to specialize themselves in these categories, which was not necessary before.
Let me interrupt you at that point, because I think that Hanno can now hear us. Am I right? Hanno, can you hear me? Oh, not yet. Okay, sorry. Then.
Michael, can I jump in with a question from our audience? Eckhard, while we're speaking with you, I think it was mentioned in the previous presentation that the project quality needs to be better under a PPA agreement, or if it is supplying a PPA rather than a feed-in tariff. The question is, why has the product quality, why does the product quality have to be higher within PPA projects? If the contract period is only 10 to 15 years, the project warranty could also be given for 10 to 15 years, right? Do you see that on the financing side also?
Yeah, okay. Well, the issue is the duration of the PPA. So if you do have a PPA with a fixed price, let's say as an example for 10 years, or a 10-year period, then of course you cannot finance 20 years on market exposure. At least at the moment, banks are not doing this. So what we would do, we would look at price curve assumptions and finance maybe then 13, 14 years, as opposed to an EEG feed-in tariff of 20 years, then with a state risk behind it. So this has changed. I mean, the quality of the product, of the project, of the seller, this must be pretty much the same. We don't finance any garbage project. No bank does this. So.
And if I may add something to that.
Yeah, sure.
Yeah, I mean, it also depends, of course, then on the investor expectations. So, of course, you fix your cash flow in the PPA for 10 years, maybe to 15 years. But what's important to understand is that the investor ultimately buying the project itself is also banking on an increase in the price curve from year 15 onwards. So he still wants to realize these higher market prices. And therefore, you should ideally have your panels also lasting for 30 years, which you calculate your project on, rather than just 10 years under the PPA.
Okay, so there's value at the back end of the life of the project.
Absolutely, yeah.
Okay, Michael.
Okay, I think now Hanno can hear me. Is that right? Okay, so I now want to come back, because originally I wanted to ask you if somebody is a project developer would come to you and ask to sign a 20 years long contract for a PPA, then what you would answer him. But I mean, we heard already that the PPAs are shorter, and we all know this. But I wanted to ask you now, I mean, you heard about rating. I mean, I think that Bayerische Landesbank doesn't doubt the rating of Vattenfall. So why you would sign the PPA with the solar company, with the solar project, but why would you then recommend to have an industry off-taker? Because why do we need to corporate PPAs?
Sorry, who's the question for?
For you, that was for you, Hanno. Oh, I think there are still technical problems. Seems there's still technical problems. Then I direct this question to Ralph, because I think you have the experience that you are looking for off-takers. Assuming that you would have Vattenfall as off-taker, why do we need the corporates in this game?
We certainly see an added value in having corporates in this game. So first of all, also the uptake possibility of utilities is not endless, right? So you see that utilities now have already taken up quite large volumes, for example, in the Spanish market, but also to some extent, for example, in the Netherlands. And as they take up more of these PPA volumes, also their risk exposure, of course, increases. And therefore, the prices they can offer to your project are also not at the same level as they were maybe with the first projects. So we see definitely a price premium potentially on the corporate side regarding that. And the other aspect are also different structures. So in some markets, for example, in Sweden or also in Denmark, you see that utilities are not really willing to take off your production as a pay-as-produced PPA, whereas corporates still do. Because they can more easily integrate that into their own hedging strategies. And therefore, we see an additional value because you can shift the risk away from the project side in markets like these.
You have normally also the task, because you're coming from the project side, to bring together your off-taker, then there's some let's say it depends on the country, but the country like Germany, as I understand, for example, they're generally energy traders like Vattenfall in between. And banks like Eckert, like Bayerische Landesbank. How difficult it is to really to meet all the expectations? And what would you wish in future maybe to change?
Who's that question for?
For you.
Yeah, it can be, of course, be very tricky to balance all these interests, as you also asked earlier during the presentation. You know, what are the expectations from the corporates? Some are willing maybe to pay a premium. For others, it's just about the price. As a project, of course, you want to achieve the largest price, and as anyone in between, you would like to minimize the risks. So you can only take up the volume and take up the price that you're also able to hedge. And bringing all of this together is certainly a big challenge that we see, but we've seen it in other markets that it's possible. And we've seen in Germany that it's possible to bring this all together. But that's why I think it's very important to start having the first experience, start having the first projects out in the market, to really see where these interests align and how you can hedge away these risks, either through market side factors or also through contractual agreements.
What can project developers do to make that easier?
Well, certainly they can become more aware of the risks that are involved. We've seen it in the earlier presentations. Cannibalization risks, you know, starting to understand and build your own view on these price curves, having an idea of the different structure possibilities, and moving away actually from this mindset of the EEG, you know, locking in your price for 20 years at a fairly good rate, but rather seeing also shorter contract tenures, working with the banks to see that still your debt service, you know, is covered properly, and really professionalizing further the project development, I think will be very important, because as we've also heard today in the different presentations, projects will have to become way more cost competitive, and in order to have a cost competitive project, you need to be really professional in your development activities.
Eckhard, what would you think that solar companies could do, solar project developers, to make it easier?
Well, first of all, they need to approach the banks at an early stage before they initiate the project or before they start any negotiations with a PPA provider. They need to have a fair and good view of the market, understand the mechanics, and also become familiar with what banks are looking for, especially when they're trying to sell a project to them or get a project financing. So the PPA at this point of time is still a very much negotiation phase. So every PPA is very individual. There's not much standardization, maybe on the Scandinavian market more than elsewhere. But in other markets like Spain, Italy, it's all very much and long negotiations to find the right price and to find the right off-taker. So that's basically all that also banks are looking for. Who's the off-taking party? How reliable are they? What is the price that, and can both parties live with the strike price for long term? So they want loan and facility agreement over maybe 15, 18 years. So, and we need to be sure that the off-taker doesn't take the first chance, like a crisis we're experiencing right now, to get out of the PPA agreement. So this is a lot of negotiation and understanding what every party is looking for, much more than before.
Jonathan, are there audience questions?
Yeah, we have a couple of audience questions that we can go to now. Perhaps from a project developer standpoint, from Baiwa Ari, you could have a good insight into this. It says, if you come to prices, do you consider ever building a project south-facing, east or west, or even with trackers in Germany, which is pretty much unheard of until today, is it not? As each will have effect on the availability of power, because we heard about this price cannibalization.
Yeah, certainly more a question for the technical team, but East and West, definitely we look into this. because you can, capture more than obviously of the market price in the morning hours. So you can kind of flatten out your solar curve over the day and therefore have less cannibalization in your production. So that's certainly something we look at. Tracking systems we do build quite extensively, but rather in southern countries like Spain, where then of course we can reach really, really attractive levels of full load hours.
Okay, and in terms of project size, there's another question. It's saying the market is very much interested in smaller PPA project sizes. In which time frame do you think you can downsize?
Yeah. I mean, earlier we heard from the colleagues of Vattenfall 30 megawatt, what they kind of define as the sweet spot. I would say we are a little bit lower than that. But ultimately, it comes down to the individual project. As I mentioned earlier, you really need a project with very good cost structure. And it's simply the case that your man hours on a project will be more or less the same, whether it's a 5 megawatt project or a 50 megawatt project.
Can you define manpowers in which part of the project? Because, I mean, for construction, definitely you need more if you have bigger plants.
Yeah, but construction is very modular, so you will need more time, but that's not what's going to push your prices up dramatically. It's more the entire project development process. You will still need to have, 2 hearings with the local community. You would still need to file for your grid application, all these things, and still have your environmental impact assessment and so forth. And that doesn't change dramatically whether you have a smaller or a larger project. So that's why we also see that definitely rather market for now in Germany with the current market prices really for the projects 20 megawatt and larger. And the other aspect to consider is, of course, for smaller than 10 megawatt projects, you still have the EEG scheme, which currently is still more attractive than the PPA prices you can reach. Yeah, for the German situation, exactly. So that also poses then a question, why really going for these lower projects on a PPA basis, at least in countries where you do have subsidies for these projects.
Okay, and then the third question I'll quickly get to now. I think it's more or less a follow-on from the first PPA and quality question that I asked earlier. If the PPA duration is 10 to 15 years, how can you expect to be able to sell energy beyond that period if any new constructed asset at that time will have greatly improved generation costs and hence be able to offer a lower price?
Yeah, so that's actually something we see in other markets, for example, the UK, where the PPA market is way more advanced already than in Germany, where you have, let's say, flex PPA options. So at a later point in time, you can still lock in your prices. But to come back to this question, then competing with newly built projects, I mean, you can still, of course, feed your electricity into the market and realize the market prices at that point. And right now, that's very much a bet on the price curves that we see. But you would just compete then with any other project there or any other generation technology.
I would like to, do you have any more questions? I would like to ask another question to Eckhard, because it also concerns the minimum size, because we had that when we discussed that last week. Eckhard, because in Germany we have already a bank which says that it would offer a more standardized PPA, a credit for more standardized PPA contract from 3 megawatts onwards. So there's the minimum size is 3 megawatts. But you say that it's particularly the financing cost, which is also quite high, that because you need really the bigger projects. Can you point out on this a bit? What is the effort on the financing side?
Yes, project finance is a very individual process. So there's many parties involved outside the project financing and also inside the bank. So projects are at the moment look very much as individual projects and financed on that basis. So every bank has their benchmarks, minimum debt capacity requirements for project financing. Now at the moment, this is maybe 20-25 million minimum debt capacity in projects. So this makes it harder to finance smaller projects that may have a PPA. But of course, you can bundle those, make a pool of certain projects, portfolio financings. So there are many opportunities how you can finance smaller projects, also possibly on a cross-collateralized basis. But financing in an individual project of 3 megawatts at the moment with a PPA this becomes too expensive on every side. So also negotiation process that is seen, and maybe possibly hedging costs, the whole loan agreement, this all costs a lot of money. This only makes it viable if the project becomes bigger.
I heard there's another audience question.
Yeah, one more question regarding what are the current PPA prices on average? So just trying to get Ralph, I think I might put that over to you.
Yeah, obviously it depends on which market we're looking at. Usually what's a good first step is if you look at the tradable futures that are liquid in the market. So as we heard earlier, the first 3 years, there's price visibility, at least in Germany, for 5 years, Nordics for about 3 years, and then you take your capture rate assumptions, and then you already have a ballpark PPA price that should serve as a first level of orientation. Or there are also third-party, providers of kind of European PPA price indexes. So if you Google that, I'm sure you're going to find an answer.
Very diplomatic.
Okay. Yes, maybe to give our audience some takeaways. I mean, Ralph, just imagine there's a solar company, which also a solar developer, which also thinks that it would also maybe go to a bit larger sizes. What would you recommend? How to really start to go into this market segment?
It depends. I mean, again, coming from the German experience, we've also seen that smaller developers actually have done first initial pilot projects, in the lower than 10 megawatt range, and they found a trader off-taker and actually have closed a short-term PPA on that. So if you want to gather experience with that, that's certainly something you could do. But once you're really looking into the larger projects, several requirements are being pushed on the project, of course, because then it really becomes about understanding PPA structures, understanding the market risks, having the legal knowledge as well on how these contracts are structured. As Eckhard said earlier, it's a lot about negotiating these contracts. It's important to bring in the bank early. So there I would rather say to partner up with an experienced developer who has already closed PPA deals in Germany or other countries, and who can also bring in, the necessary financing capabilities, because ultimately, somewhere along then the late development phase, the construction phase, you will need something like parent company guarantees in order to make the counterparty feel comfortable, and that typically is a bit harder for smaller parties to wrestle up.
By the way, is it a good idea for a solar developer also to look for corporates to sign the corporate side of the off-taker side, or is it the job of the energy trader to do this?
I would say certainly for larger developers who have a track record, who have done PPA projects before, I definitely see a direct route to market there with corporates, as we see, for example, in Spain, as we see in the UK, as we see in Scandinavia, where typically the projects close the PPA deals directly with the companies. If you're a smaller developer, I would rather say focus on the utilities and traders first.
Okay.
Because the overall process with corporates will take longer. It's important to understand their hedging strategies. You have to go through a lot of committees, etc. So I think it would be rather discouraging as opposed to going with a utility or trader who might have a bit more standardized processes in place.
Okay, thank you very, very much. And we want to apologize, Hanno Mead from senior expert at Vattenfall Energy Trading. He has technical problems with the internet connection, therefore he could not come back, unfortunately. But I'm sure that we will have other opportunities to speak. And in the German PV magazine, you find also an article on this topic where we have also a lot of the views of Vattenfall in there. So we move to the next topic. So now we are switching the topic. We are coming to hydrogen, which is another sphere where solar companies can have business options in the next years. And I mean, we always think that it's a far future, but now today we have a guest who said that it's already now time to take care of this segment, and that is Christian Poduc, Managing Director of Smartenergy Projects, and he presents on how green hydrogen production becomes a hedging mechanism for new large-scale PV plants.
Hello.
Hello.
Hi, Michael.
Hello, Christian.
Thank you very much. Well, I'm very pleased to be here and to have the chance to present our projects and also to support this conference, because we think that it's really a joint team effort of renewable energies together with hydrogen. The big developments in renewable energies made it possible that, in fact, now the hydrogen economy is not, I think, another promise which we will have to wait for, but it's really developing based on the LCOEs, which we could achieve with the renewable energies. And what I'm going to show you is a bit how we approach it from Smartenergy side in a specific location, Portugal. And it also shows you need to put the right parameters together in order to make the whole thing work. But we know the hydrogen is something, green hydrogen production, which is upcoming and will scale and change and enable the energy economy and also the feedstock, which reduces the carbon footprint. So just about Smartenergy, we are a developer on one hand side, but also investor and also a financial player. And we develop, build, operate projects, and we had focused on solar and wind in the past. Now, green hydrogen has become a part of our strategy because we see that this is something which complements each other and in fact makes our investments into the future more secure by at the same time helping our planet and the decarbonization which we are all looking for and we all need. As for us also, hydrogen is not that we have done it for a long time, and we engaged together with Roland Berger, who has already supported several hydrogen projects, for instance, early this year, and also with Vattenfall on the financial side to make our projects viable. So not to lose time, because we think that time to act for us is really now. And I want to show you a bit how our projects are kind of structured. We have, and maybe a word about Portugal, a good pipeline in Portugal, 1 gigawatt in various stages of development. And these projects have a good part of it, planned situation with a secured grid connection. Now, they would work already by themselves. They have PPA already in place. But now with these developments we have with the hydrogen strategy, also in Portugal, I'd say a few words about this later. There is a chance to add hydrogen production to these PV projects. And obviously, as there is already a PV business case with a PPA in place, adding hydrogen makes only sense if the total business case is not deteriorated or rather improved. In order to make that, we have obviously investors and ourselves, and it would be a hard thing to make it much worse despite the good intention. The second part is an interesting story because we have lands, we have secured areas where the grid connection is not yet secured. It may be enabled, but it's not sure. And now with the possibility to make a hydrogen production facility in combination, suddenly the grid connection is not a showstopper anymore. We can think about also using such projects specifically on hydrogen production. So suddenly these projects become viable. And last but not least, projects which are already running with support schemes like feed-in tariffs and others, there could be the option to think about, well, it's still a runtime to go, but they have already more or less paid off. Wouldn't it be an idea to switch the support which is given for the PV for the remaining time into a support to add hydrogen to such power plants? So you would divert somehow the support mechanism, not in a technology which today is quite mature. Luckily, PV is no doubt it's proven itself to be super cost effective and reliable. But for hydrogen on large scale, we still have to prove it. So to divert this into hydrogen would be maybe a good idea for governments to think about. Well, the challenge is that there is the technology cost offtake pricing, governmental initiative, all needs to work together in a way that you have a business case. Nobody will run for a project, nobody will finance it if you don't get to an IRR which is acceptable. And for this reason, we needed to go into each of those quite deeply to understand where are the boundary conditions and what can be optimized and how this plays together. And it's really quite a complex story to look at, but we are convinced it's possible to manage the right way. And we have done a lot of effort in Portugal to make it for our projects. Technology cost, there would be a lot to say about it on the electrolyzer development and other costs which we have to think of. The off-taking is the one and only thing which is killing a project if you don't know what you do with the hydrogen. But still, all the two being there, the government needs to do something, because if we look today on how green hydrogen is positioned on a cost situation, we see that it's somewhere, depending on the parameters of such a project, it's well above €3. And blue hydrogen, which is a kind of an alternative to it, which would be kind of, if you compare something which is also carbon neutral, it's in the range of €2 or €2.50, including carbon capture and storage. So there's still a delta. And if we want to support green hydrogen, it needs some support initially. Main reasons why there's a big gap in this cost is that today there is a limited scale of production done. I mean, the electrolyzers so far haven't been in the tens of megawatt and more scale, but much smaller. So the potential of cost reduction is not yet exploited. And also for the rest of the value chain, for example, all the equipment, the logistics behind transport, all that is not developed in a way for high scaling. Also, the second is that the competition, if we look to the competitive pricings, well, green hydrogen competes with fossil fuels, which not really were not really taken into account, all the corresponding costs on CO2 and other negative factors for our environment. So what on the governmental side is needed is some key approaches, and luckily Portugal, with its newly released national strategy on hydrogen, has reflected exactly on some of the major points we are looking at, and some on top of even of them. And so the one thing is we need to focus on the green hydrogen, because this is the only which really scales. If we look into so-called blue hydrogen, it's not really a scaling mechanism which will reduce so much in cost and have the same effect as on green hydrogen. We need market targets. We need support of the hydrogen production. We need the stimulation of the hydrogen demand. And here a very important point has been taken, because there are clear targets, for example, for the natural gas grid injection, which immediately gives us a clear off-taking route to get started. However, I also believe that going to the industrial, which is the main off-taker today of hydrogen, and mobility, which is to come, like buses, trucks, etc., these really take the hydrogen value even at a higher level, the green hydrogen level, because there you need really the element hydrogen and not just the caloric value, like the natural gas if it's blended into it. And last but not least, it can also stimulate by its own use in the public sector, the hydrogen demand. And the current outlook, in fact, it's in public consultation, the strategy, is that it looks really, really good that these boundary conditions are being given by the governmental approach, which is one of the three of the triangle topics we need. Also, the gap which needs to be closed, you need yourself to think about how to manage it the best initially to keep it as small as possible. You see that if you look into an optimal case and a challenging case, first of all, where you produce can be a big difference. Let's start with the simplest parameter, the solar irradiation. But then if your value chain is a big logistics and distribution cost behind, the gap gets much bigger, and the gap then is to closed, for example, by governmental support. And obviously the smaller gaps initially is important to go for to get, how can I say, a scaling effect. So just a comment to hydrogen, the transport, the storage is not an easy thing to do. It's costly. So you need really to think about how to set this up, generation, off-taking, and the route to it to make it very, very efficient. And I will not stay long on this chart, but just to show that once we scale at higher level, the transmission pipelines would be the most cost-effective way to transport hydrogen. Obviously, there are other ways are also important for shorter terms, but you see easily you start to add €1 or more in the costs, which is a huge thing. If today, as we have seen, it costs just €1 to €2 the hydrogen by itself if you add the same amount by transport. Also on the off-taking, just as an example, a clear target for 2025 already for the green strategy, green hydrogen strategy of Portugal is 5% gas grid injection. And making a quick calculation, you see the capacity needed on PV side. If it would all be done by PV, just a kind of a thought experiment, you would need 700 megawatts. Maybe it doesn't seem too much in this context of the total PV, but if you see into Portugal, it's roughly the whole which is installed by today. So it's already doubling PV in Portugal. And there is a clear target in Portugal now to increase PV by a large amount. And so this is a really fitting business opportunity. On our schedule, we have launched a project, and obviously it takes some time permitting. There's a lot of topics to solve on the way right now. But in 2022, we expect to be ready with the first green hydrogen output from our production sites. And again, similar projects of 50 megawatts, for example, 14 of that in the country would be this just a 5% gas grid target. But you need to know, it's not just a gas grid injection topic. We have also targets in industry consumption, in mobility, and others by the Portuguese government to cover. We have to focus on some specific off-taking and usage cases from our side. Hydrogen really is a big ecosystem which will develop, and it's not about just energy, it's a feedstock, it's a raw material. So our focus, as marked here in yellow, is on the one hand side to distribute the energy, so through the gas grid injection, but then also serve as raw material feedstock and in the mobility transportation sector. And from the usage today of hydrogen, with these changes in the ecosystem using green hydrogen, there's a huge, this is a Europe projection, a huge increase of need of hydrogen. So the demand will grow much more beyond what is needed today. So last but not least, and then we started a bit and end with this in my presentation, we need what happened actually in solar. In solar, or also in wind, but even more in solar, we had this kind of sudden boom, which had also some negative effects, but the scaling happened because there was a business case for the investors. It was a new technology. It needed some extra premium in the return that people would jump on it, and it happened. And today, much more than the subventions which have been put into solar, we have the benefit of this very low LCOE situation through renewable energies, which now enable green hydrogen production. And green hydrogen production needs the same. We need to scale from the low level we are today in a very short time to higher volumes, especially also in the electrolyzer industry. And suddenly the costs can drop down dramatically. So today, if we look into what the situation is, this is the subsidized off-taking price, or whatever you get as a manufacturer or generator of green hydrogen. And if we look into also a subsidy on capex, like a 50%, only the combination of such pricing of €4 and 50% capex subsidy on a 50 megawatt project leads to kind of a low double-digit IRR, which from my perspective is a level where today investors would be ready to scale, to say, I do projects, I do more projects, I want to do as much as possible projects, and that's what we need. So here we need to set the right support mechanisms in order to get to a scaling effect. And with that, we'll see really in the coming years a shift into a green hydrogen-based economy. Well, thank you very much.
Yes, thank you very, very much, Christian, for this interesting talk and presentation, which sets the scene for our panel discussions. I think there are two topics now to discuss. That is how to set up such projects and when these sort of projects will come. I want to welcome our other panelists. This is Karl Hauptmeier. He's Senior Product Manager Electrolysis at Sunfire. And Pedro Amaral Jorge, he's President of the Portuguese Renewables Association, APRIN. Hello, and I want to jump right into the topic and direct the first questions to Pedro, because we heard that in Portugal there's quite a lot going on in this hydrogen sphere. So what is the state of the discussion in Portugal? How concrete is it? As I understand, at the moment it's just plans, so how realistic is it that these plans become concrete, and what is your view on these?
Well, thank you very much for the invitation. Going straight to the point. What Portugal is doing is putting together a national strategy regarding green hydrogen generation. And in order to do that, as Christian mentioned, there are a couple of things that need to be resolved. And basically, what is under the strategy is the basics for a project to come to life. One is support mechanisms, both on CapEx subsidization and on a feed-in tariff to allow the projects to be bankable, understanding the usages of green hydrogen, making sure that all of the key variables are being addressed, and mainly one is water availability, because we can't forget that Iberia, compared to north of Europe and Central Europe, has water scarcity. So we need to come up with a plan to maintain a continuous supply of water, and that was addressed by using wastewater treatment plants as a base for water, bring the treatment up to disinfection stage, and then use that water for green hydrogen. Also, the government has put together a national energy and climate plan with very high ambition, with 40% of final energy consumption from renewable sources, and PV will have a basis of 9 gigawatts to be installed up to 2030. So up to that, bringing the off-taker also with a strong balance sheet and investment grades. These are the basic conditions that are under the strategy, and I believe will make the projects buildable on the sense that the bankability is being worked on to make sure that investors and financiers can address it on a project finance structure.
And the government has already agreed to this plan?
Yeah, the government was actually the one that published the plan. So the strategy was all together, all of the stakeholders participate. APRAN and myself, we participate also, and bringing this document alive. So this document has already been published by the Portuguese government.
Mm-hmm. Thank you. Karl, I want to ask you something. You are coming from the electrolysis side, and you are also investigating how to set up green hydrogen generation in Germany. So what are your comments on what you have heard? Do you share these cost estimations and this optimism that it's possible to set it up?
Well, yes, thank you for being here. Generally speaking, absolutely. I think hydrogen, it is on vogue, so to speak, and rightfully so. And now is really the time where hydrogen starts to pick up. I think my previous speakers have already mentioned most of the most important points, and I would just like to highlight that actually Germany now as well is rapidly moving up with the new economic stimulus program, where exactly those points that were already addressed by Christoph, which are immensely important, which is really the offtake and the usage of hydrogen and allowing for market to give the investors the security in investing and building up those projects, that this is being addressed. So we're now looking at, for example, a German stimulus program of more than 7 billion euros for the technologies, a target of somewhere around 5 gigawatt of electrolyzers by 2030 in Germany alone. We have the Netherlands next to this as well, with their target of 5 gigawatt, and we see similar targets popping up all over Europe. But most importantly for me is actually the open discussion now regarding quotas and usage of hydrogen for the final end consumers. So in chemical industry, in steel industry, in the transport sector. And this is what really going to drive, so to speak, the uptake of hydrogen industry, which is just to have a business case by having the off-takers.
According to the situation in Germany, I mean, there's this electrolysis program is a plan, but is there also some intention what sort of electricity should be used for this? Because I mean, that is a special point in Christian's presentation, that it's really the idea to really have it together with photovoltaics.
Yes, absolutely. I mean, generally speaking, what we are also very, very positive and happy about is so far what we've seen from the German government is that there's a clear commitment towards renewable energy. So absolutely, to produce green hydrogen, you need renewable energy. This is absolutely clear. Germany, of course, is sort of faced with a different situation than Portugal. We don't have as much sun. We probably have a bit more wind. But generally speaking, we have a lot of PV capacities as well here in Germany. However, I think one very important point that always needs to be taken into account is hydrogen has a lot of different application possibilities, but a number of different applications also allow for a different number of how you could set up a project. So you always have to look at the overall system. What is your energy system offering you? How's the transmission grid? What are the end consumers? Where are they? And how do you look at transport? In the end, it's always a mixture of those that need to be balanced. And I would probably argue that Germany has a different situation than Portugal. But nonetheless, there's absolutely room for bringing in PV power and using it in Germany. If it might be structured differently, potentially, you might not have as much direct connection next to a big PV field, because we're probably not going to have as many big PV plants. We're going to have more decentralized distributed PV producers in Germany, which need to be pooled to some extent. But on the other hand, we have some very, very big consumers in the heavy industry, such as refinery and steel. So I think this is just sort of the boundary conditions that are very much going to define how the market is going to be addressed.
Jonathan, do we have audience questions?
We do indeed. Quite a lot of interest in this. Of course, the renewable resource will dictate where some of the electricity is generated. Then you have to transport the hydrogen. And one of the questions addresses this. Christian, you said in your presentation that pipelines really look to be the most cost-effective way to transport green hydrogen. Hopefully it's green hydrogen. When you blend, and the question is, when you blend hydrogen with gas, how much hydrogen, as in what percentage, can you blend? And what happens with the pipelines? Do you need higher pressure?
So, in fact, the first step right now in Portugal is a blending of 1 to 5% from the start. The technical analysis so far shows that there is no substantial effort to go to this level. Further studies show that up to 15% you can roughly go with the same infrastructure. Still, obviously, there need to be some adjustment. I'm not the super expert to say whether the pressure now needs in the end and which percentage really to be adjusted or not at that level. What I know is that once you go above this level, and this will be a few years to come, because I already showed going to a national grid level of 15% is already a lot of capacity of PV to do that. But so we have a 10 years time or so to go to higher levels. By that, I think that dedicated pipelines in hotspots like high generation place to high off-taking side will be an option in some demonstration projects. These kind of, how can I say, tests are already being done.
Pedro, I see you're wanting to jump in.
Actually, the Portuguese network for natural gas is quite recent. So the main pipelines were built initially in 1995, and you have two main systems, a transmission system and a distribution system. The transmission system is in carbon steel piping, and the distribution system is on high-density polyethylene. So our infrastructure is ready, especially on the distribution side, the low pressure, to absorb a lot of hydrogen. So that should not be the issue. The issue is on the end usage of the hydrogen mixed with the methane of the natural gas, because you're going to use it for burning. And burning, when you do a mixture, between hydrogen and any hydrocarbon, you have the issue of flame speed. So you need to control that. But basically, on the distribution pipeline, that should not be an issue in Portugal.
Okay, interesting. There's another question, and I think it's an important one. Christian, I'll put this to you. For green hydrogen, what price per kilowatt hour do you need to make it feasible? I am sure many people in the solar community are trying to do the sums right now. What price do you need?
Yeah, so the LCOE, in fact, is a very strong factor on the total cost onto the LCOH in the end. In fact, besides the electrolyzer cost, which is also very important on the capex side, the LCOE is a driving factor. We have done simulations starting from 50 euro per megawatt hour down to 40, 30, 20. And obviously, it has a big result in euro per kilogram. So you can go, in fact, on these steps almost a euro down each time. Well, it flattens out a bit over in the curve. However, I think that already with 40, it's already a decent business case with some support, governmental support, but on the expectation on the next kind of 5 to 10 years, it's rather looking into the 30 and below area where it becomes competitive than by itself with the other hydrogen generation methods.
I would like to jump in at that point because I had that obviously also on my list. When you say it will go down to below maybe 30, what do you think will be have the most significance for the cost reduction? Is it more on the electricity side or also on the capex for the electrolyzers? How does that? What is the relationship between those?
Yeah, I mean, we have done quite extensive work on the modeling with all the input parameters. And in fact, the capex is a very important topic in terms also of the initial decision point. However, on the long term of the time of the project lifetime, the LCOE is even obviously more important. But we have other topics which are very as important to judge. The loading factor is a very important one. The efficiency which we are looking into, which are also defined by the technology you use. These are factors which kind of you have to balance. And if you calculate, you get always an optimization either towards IRR or LCOH or maximum hydrogen generated. And it depends a bit which projects you're on, to which corner you want to optimize.
I think to the loading factor, we have also some audience questions, and it's an important topic. I mean, in your calculations, you don't consider that you use the electrolyzer also when the sun is not shining. So you wouldn't use grid electricity. Why not? So wouldn't that reduce the price, the cost?
No, so in our project, actually, we have different project types. And we think that if you look into the loading factor curve, there is kind of a very steep curve. If you go below 30-20% loading, you get really high up in the costs. If you go from 30 to 40% loading, you maybe reduce by still 20% your LCOH. If you go from 40 to 50, it's another 8% or so, and then it flattens out a bit. So I think you need to find a solution to go to loading factors to 40-50% at least. Better would be even 60 or so. But after that, it doesn't matter too much anymore to even increase further the loading factor. So example, if you combine solar with wind, you can already get to 45% or something loading in Portugal. So if you can combine these energy sources, which also is a discussion on PPA, in fact, or if you think about some storage possibilities, you can also go higher up, or you use some grid capacity, but you don't need to really load the electrolyzer to 90% all the time. So just some support from the grid already helps a lot because to improve the situation. A bit dependent on the electrolyzer type.
I would like to hear Carl on this point because obviously as you're building electrolyzers, you have some opinion about this.
Yes, well, thank you. Actually, it's a very, very difficult question to answer or to just give a right or wrong answer to this one. I mean, first of all, it also depends on the electrolyzer type you're using, as Christoph mentioned. So basically, depending if basically it's just also a CapEx OpEx game in the end. So the more expensive your equipment is going to be, the more important the loading factor of the electrolyzer is going to be. So this is something that we can also expect to decrease over time. We are currently at the beginning of the learning curve. So the electrolyzer is not there yet. We're not in the multi-gigawatt production capacity as PV is. We need to get there. So with reducing electrolyzer cost, loading factor will reduce in their importance. However, this being said, I think one critical question always, and this is then again, it's a project-related approach that you have to look at, is really looking at transport, storage, and the end user. Because if you can produce hydrogen and basically inject hydrogen whenever you produce into the grid, then my assumption, I would absolutely agree with the percentages. If you have a loading factor of around 40%, electricity price will be the driving factor at this point, and this will be perfect to run an electrolyzer around this around this loading factor and just inject it. However, if you have an end consumer who might not be as flexible in the operation and the usage, the offtake of hydrogen, then you have to take into account again storage and transportation, and then the calculation might look very different.
Petro, what is your opinion on this? Is the only possibility to get the green hydrogen demand up to really get the price down? Or is it also maybe that the price of the fossil generated hydrogen might go up because of certificate prices? Or maybe also that the people are willing to pay more for the green hydrogen?
Well, what I think is when we are calculating the cost of hydrogen from different sources, and may it be blue or green, we need to put all of the right costs into the calculation. So you need to actually calculate the environmental for costs in terms of environmental costs and public health costs on the blue hydrogen. So I believe we need to come up with a standard calculation to compare the two costs. On the other hand, as we mentioned, of course, that generating the hydrogen, the most representative cost on the OPEX side is power. Portugal has demonstrated that LCOEs of PV can be around 25 in Portugal. So we have a case scenario for that. Of course, this is not spread around, but it can be achieved. And we need to keep also in mind that, as it was mentioned previously, storing it and making sure that it can be used with the flexibility that it's required is also important. So again, comparing the two costs, we need to bring all of that into consideration. And I do believe with economies of scale and continuous drop on levelized cost of electricity, we will bring the green hydrogen costs lower.
I think we have quite a lot of audience questions. I would say the first one, Jonathan, would maybe connect to this and also to some European perspective.
Yeah, indeed. And perhaps best directed towards Karl. Do you agree with the German government that Germany cannot produce all the hydrogen that it needs?
Yes.
And why is that?
Well, basically, it's a simple calculation. If you look at Germany today, we're importing roughly 90% of our primary energy consumption. Now we're looking at a basic conversion of our energy system towards renewable electricity. At the same time, we're looking to keep our heavy or energy-intensive industries and decarbonizing those as well. So it's quite a simple calculation. If you say that beforehand we imported 90% of energy, it's quite a high or a steep ask to say that we now going to be completely autonomous in our energy production. And just if you look at it, even if Germany would be possible to produce enough renewable energy to cover all their demands in all the areas, in all the industries, the question is if that would be the wisest choice. Because first of all, there's an acceptance level that needs to be taken into account with the population. So how much can you actually build up, so to speak, in your backyard? And the second point is that, as mentioned, there are tipping points when transport can become quite reasonable and cheap. For example, via pipelines, for example, there are tipping points where really the renewable electricity production cost will be the driver. And so there is absolutely a feasible scenario where you say that for certain production capacities and for certain use cases, you produce on site, because this is actually saving you a lot of money, transport money, and so on and so forth. But for other use cases, you're gonna have basically import of energy in a chemical form, as you have today. The difference is going to be that instead of it being fossil or crude oil and natural gas, in the future it's going to be hydrogen or hydrogen-based chemicals, basically.
I think I would like to move on with this topic, because I mean, first a comment maybe. We worked on this in the last month because there was a study from Fraunhofer ISE which says that, which has energy cost optimized energy scenarios, which says that about 70% of the hydrogen can be produced, which will be needed in 2050, can be produced in Germany, and the rest should be imported, which is still quite a big number. But maybe to direct it to Pedro, is that one of your visions also for Portugal to produce, to generate hydrogen for more northern countries of Europe?
Well, there is a strategy to do that, because if you look at both Portugal and Spain potential for renewables, when you compare it to other regions in Europe, it's by far the largest in terms of the amount of electricity that is potentially available. And so as long as we can make sure that we have the logistics set up and the full cost of hydrogen on the value chain that was mentioned before, which is storage, then transporting, handling it, I believe that Portugal will be actually shipping out and exporting green hydrogen for the remaining of Europe. It can be done through the pipelines, but you have a limit. But in order to not have that limit, you can use other logistics to actually do that.
Jonathan, do you want to give another audience question to the experts?
Yeah, absolutely. More than happy to. What about coupling hydrogen production with offshore wind? I know naturally we are PV Magazine. We're a little bit solar focused and quite unapologetically so. But how does hydrogen production and offshore wind sync up, perhaps? Maybe Carl, again, you can take that.
Yes, happy. Generally speaking, this is quite a good match, actually. So generally speaking, offshore wind has quite high capacity factors. So those 40% that were mentioned before, which I actually believe are quite a good guideline to go by, they are quite easily reached by offshore wind, with maybe some backup solutions. But basically, this is very feasible. So yes, there is a case to be made that offshore wind can be combined with hydrogen production, and then hydrogen production can be transported away from those centers, for example, via pipelines. But again, it's very specific on the market you're looking at, if that is the most favorable solution. Because in the end, what you have to counter against this, just to build up a scenario, for example, let's say you produce hydrogen in the northern parts of Germany, but you need the hydrogen in the southern parts of Germany. So you have a pipeline. Okay, pipeline costs are not that high, but still, this is what you're basically covered with. So you compare these costs with an alternative approach where you say the same consumer in the southern parts of Germany is building an electrolyzer on site and is using basically a portfolio approach of renewable electricities by pooling different PV resources and onshore wind resources, where electricity price in the end might be a bit higher, but on the other hand, you don't have the transport cost. So there is cases for both scenarios, and I believe it's not made out yet who is going to be the winner, but definitely offshore wind and hydrogen, there is a very good fit there.
And would that also be a PPA market? So would the electrolysis companies, would they close direct PPAs with solar and wind plants?
I believe to some extent there's going to be the future. I mean, I believe there will be different stages, and this again depends on the market and the country you're in, because it's also very important to look at the grid structures that you have and that you can basically take into account in these considerations. I mean, generally speaking, just as a flat comment, if you can directly connect to a good location, to good production capacities, this will of course drive down your production cost of hydrogen dramatically. So if you can combine this then with a good infrastructure or let's say short distances of transport, this is going to be the winning case in the longer run. But of course, it adds on the complexity, so to speak, that you need to have in a project. You need to align the production of renewable electricity with the production of hydrogen, and then the usage of hydrogen. Everything needs to be balanced out, so to speak.
But wouldn't it make sense to have, I mean, to come back to Christian's example, where you co-locate also the solar with the hydrogen, that at least co-locate one big solar plant with the hydrogen, and then have PPAs with other, because then at least you save the grid cost for this one part, which is fed by the co-located PV.
Absolutely, I think that could absolutely make sense. In the end, it's really the question of where will the bulk of your electricity come from, because this will drive your costs to a large extent, and where will the rest come from to sort of reach reasonable load factors. So either basically the question is always either you produce, either you put the hydrogen production where the electricity is, or you put the hydrogen production where the usage is, and this very much depends on the grid.
We are already a bit over time. I would like to end the panel with one final question where we maybe can really answer with one sentence. What do you think, how long will it last until green hydrogen generation will become a segment interesting for PV producers? Already today, next year, in 5 years, in 10 years? Maybe we can start just in the line. We see you, Carl, then Pedro, and then Christian.
Well, looking at the stimulus programs that are popping up today, and looking at the 5 gigawatts up to 10 gigawatts that are aimed, for example, in Germany, 2030 to 2035, I believe hydrogen production is going to come today. And hydrogen production thus should not be ignored by the PV community, because there will be demand for renewable energy, there will be a dramatic demand for renewable energy, and there will be solutions to actually pool this energy, for example, via PPAs, specifically in Germany now talking, and there will be niche markets to really start producing hydrogen in high radiation areas where you can then bring the cost of hydrogen production down. So I would say the journey starts today. It will not be a gigawatt market tomorrow, but if you don't pay attention now, you will miss it.
Pedro.
Well, I agree that we need to look at the cost reduction trend as the one we look for levelized cost of electricity from PV. I think green hydrogen is a new market for electricity generated from PV. It brings you a way to actually sell a product outside of your grid. And I do believe also that with the stimulus package for the European Recovery Plan, where it will be based on green transition and economy digitalization, that a huge trend of investment will come for decarbonization and to bring up Europe in a new path towards carbon neutrality. So yes, I do believe that it should be a market to look for.
Christian, final word.
So yeah, from my side, with the carbon targets being very strong in coming times, we see already from mobility side, bus and truck, from industry side, industry approaching us and asking when can I have how much green hydrogen. So the demand is already looking into the future today and looking into how can we make agreements on the volume which will be needed. So, and as we know, starting today, a project will take a few years to get the green hydrogen out. Well, the time to act is now.
When will you realize your Portuguese case study?
So our lead project is scheduled to have green hydrogen output in the second half of 2022. So
you will have to start construction already next year?
Yes.
Okay, great. Thank you very much. I think most of you, maybe also all of you, will be in the Meet the Expert room after the session, so where you, everybody of you can talk again to our experts.
Well, Michael, it looks like we're coming to the end of this market session. In the PPA outlook, particularly in context of Corona, I was struck with it's a little bit mixed. in the long term, definitely things are looking very positive for solar PPAs, but there's some short-term challenges caused by uncertainty, I suppose, as to where prices will go and where demand will go. Electricity prices, that being, is that kind of your takeaway as well?
Yes, that is also my takeaway. And also, of course, the second takeaway, it becomes more attractive for smaller companies and also for smaller projects, the more the standardization goes forward. And I think that's where really the experts and the banks and the big companies are working on.
And that means standardization in the contracts, in the lending facilities.
Yeah, that the banks, that they have a common ground on which they can judge about the risks. That is, I think, the problem. And I think they have also some internal discussions because there are also different departments and they also have to convince, for example, the internal risk assessment that they would accept what they are planning. And that takes some time. And I think it will maybe also be a bit different country-wise. So it depends also on the situations in the different European countries.
Well, we definitely see that things can move fast. So when feed-in tariffs were first introduced, things got standardized. The cost of capital for solar went down. So.
I mean, we never have thought last year that it would be so fast that we are seeing the PPAs in Germany because we have less sun in Spain, obviously. But they were coming then fast last year.
Indeed, and it's also nice to hear quite a lot of positivity about the hydrogen economy, which it feels like we've been talking about for a very long time, but it also feels like where the price points that renewable energy is hitting today, hydrogen is becoming increasingly compelling as an option to address a whole heap of issues in terms of long duration storage and also providing renewable energy to a wide array of off-takers.
Yeah, I mean, there's a lot of discussion whether this hydrogen is a bit like a method to maybe also to push back decentralized renewables. But I think as we have heard here, we have to take the chance. I mean, that is, I think, the important point. We have to push the hydrogen generated by photovoltaics and wind.
Yeah, and it will also change the energy landscape a little bit. Portugal may become a renewable energy and green hydrogen exporter to other parts of Europe.
Okay, that was the takeaway.
So some really nice discussions here today. We've had really fruitful discussions over the last 4 days. As we said, over 2,000 registrants, about 1,000 people joining us every day, over 50 experts, really a huge lineup. But of course, none of it would be possible without our sponsors who have come on and supported us in this Digital Roundtables Europe initiative. Michael, who are they?
Yeah, we want to thank very, very much to our sponsors, which are for these 2 days, Ariel Ray, Coveme, DuPont, FEMA, First Solar, Jinko Solar, Next Tracker, Shoals, CEA, ET Solar, Longi Solar, SMA, Smartenergy, Stäubli, Vattenfall, and von Ardenne. Quite a long list for.
I think Michael, social distance even further so we can see the logos on the screen if you could move over. So thank you very much to all of our sponsors.
I have to go here, by the way, but I'm not allowed.
Indeed.
So.
Thank you very much to all of our sponsors, and thank you also to the PV Magazine team. There are a lot of guys up on the stage, unfortunately, but there were two very talented and very clever women who worked extremely hard on making sure these events could happen, particularly under the COVID-19 shutdown. We had to very quickly reschedule things, rearrange things, and take our in-person events online. So thank you very much to Frédéric Aiguera and Marina Ramin, who worked behind the scenes tirelessly to put these events on, and they should be congratulated.
Yeah, I can add nothing to that. I think they did great work.
And thank you very much for tuning into this market session. Of course, there are still networking opportunities. There are still meet the speaker opportunities. This is not yet over. Please continue to engage.
Maybe I can add something.
On the event
I will
platform.
be available in the networking chat in, I think, 15 minutes. About 50 minutes.
That's very good of you, Michael.
If you want to chat about the session.
And of course, we have daily polls as well. We do encourage you to send your feedback as to the event. It's very important to inform our work if we are to put on another series of virtual roundtables, that we get your feedback and we continue to work on the format and the experience that we can deliver to you. So fill out the forms, fill out the survey, take part in the networking, meet people who are also attendees, and meet our speakers. Yeah. And without further ado, thank you, Michael, for this session.
Jonathan.
My pleasure. And thanks for your attendance. Look forward to hosting another virtual roundtable sometime soon.